Are you a scaling SaaS founder?
Ready to make the leap from leading a team to leading an organization? Join us each week as we refill your think tank with actionable tips and strategies from great business minds you know and those you don't know yet. This is SaaS Fuel with your host, 5-time entrepreneur, SaaS founder, and globetrotting adventurer, Jeff Maines.
Welcome back to the SaaS Fuel podcast, where empowering people is core to our playbook, passing the ball so everyone gets a shot at scoring. I'm your host, Jeff Maines. I help B2B SaaS founders like you grow from traction to scale. Here, growth is more than just numbers. It's about crafting a future-proof company, premium valuation, and leaders who build a business of significance while living epic, adventurous lives. Ever feel like having hard conversations is the kryptonite to your leadership superpowers? You're not alone. Here's the game-changing truth. Mastering tough conversations is the secret sauce to elevating your leadership game. Today, we're tackling those cringeworthy moments head on. I'm sharing my top strategies to transform those painful, awkward chats with employees, partners, or teammates into productive, empowering dialogues. Let's turn those tough talks into growth opportunities. Sound good? Here's the challenge. Difficult conversations are inevitable. Whether it is delivering critical feedback, discussing performance issues, or resolving conflicts, these tasks can make or break your team's morale and productivity. Avoiding them is not an option, and mastering them is a necessity. Here are just a few of the craziest, most awkward conversations I've had as a leader over the last 25 years. And in the interest of full disclosure, none of these are in my current company. But way back in the old days, when we were in real offices all the time, I had to have conversations with an employee. One was about aggressively recruiting other people into their MLM. There was the lunch thief, somebody stealing lunches out of the refrigerator. There was the phantom farter. True story. There was the perfume enthusiast, and I'm really not sure which one of those was worse, the farter or the perfume. Awkward conversations. There was the inappropriate wallpaper, screensaver. There was a person who couldn't hit the toilet repeatedly, and it was a woman. And then there was a guy 10 years older than me who didn't shower, use deodorant, or wash clothes. I'm telling you, awkward conversations. And the crazy thing is a number of these people were six-figure employees. Completely mind-blowing, right? Well, how do I handle that? Well, let's break it down, just three-step framework to turn those tough talks into triumphs. The first is to prepare with empathy and clarity. Before diving in, especially in some of these crazy situations, take a step back and put yourself in the other person's shoes, assuming that they are sufficiently washed. But understand their perspective. And prepare clear, specific points that you need to address. Empathy doesn't mean sugarcoating. Don't do that. But it does mean acknowledging their feelings and setting the stage for a constructive conversation. The second is communicate with honesty and respect. During the conversations, be direct but kind. Use I statements to express your views without sounding like you're accusing them of something. For instance, instead of saying, you're always late and the team is complaining they hate you, don't do that. You might say something like, hey, I've noticed that you've been arriving late recently and I'm really concerned how it's affecting the team. So that approach fosters openness and reduces defensiveness because it's an observation, it's not an accusation. And third is follow up with support and action. Post-conversation, once we do that and we jump in there and have the conversation, that's the beginning, that's not the end. So ensure there's a clear action plan and then offer your support. This could mean providing resources, setting up regular check-ins, or just being available to listen. Following up shows that you're interested in their growth and committed to resolving the issue. It's about the issue, it's not about them. An example of that, the stinky guy, not the phantom farter, but the one who didn't shower, use deodorant, or do laundry. No one had ever told him how to do those things. He just was never educated on how to, do basic, human things. And so, it was awkward in itself, but yeah, I gave him basic hygiene 101. I mean, the same thing I probably learned in, I don't know, fifth, sixth grade. We went shopping, kind of up leveled his wardrobe, gave it a little bit of an upgrade, and even explained, what happens when you leave clothes in the washer for a few days and you just toss them in the dryer. It's not good. But it was a process. It wasn't perfect, but there was significant progress and did really, really well. It was a fantastic employee. Just, there was a specific weakness, and it wasn't necessarily a weakness. It was just, he did not know. I'd never had anybody talk to him about that or really, show him how things were supposed to work. And for me, that was a really big epiphany. And just kind of a change in my perspective. Tough talks are not obstacles, they're opportunities. It's an opportunity to build trust, to drive growth in your team and build leadership muscle. It builds confidence, and you prove to yourself that you aren't afraid to tackle challenges head on. By mastering these conversations, you're not just managing a team or addressing an issue. You're not just managing the team, you're inspiring the team. You're inspiring a person. You're inspiring them to be better, to improve, to up-level themselves. And so the next time you're dreading a difficult conversation, remember, is a chance to elevate your leadership game and keep your team strong and steer your business toward success. So embrace the discomfort, wield empathy and honesty, and watch as your leadership reaches new heights. Our founder on Tuesday was Beth Nevins, founder of Developa.io, an experienced operator in the people and talent space. Beth specializes in recruitment and people operations design. We talked about the leadership mindset shift, especially between stage A and B companies, and the best talent strategies in 2024 and beyond. Our expert guest last week was Michael Begg, co-founder of AMZ Advisors. He helps clients drive over $500 million in online sales, and we talked about how to go to market, how to successfully sell online, and leverage the best e-commerce strategies to convert more SaaS subscribers. If you missed either one of those episodes, go back and give them a listen. Lots of great stuff there. My guest today is Kyle Kuderewski, operations manager at WebStreet. He expertly combines his engineering background with entrepreneurial spirit to streamline operations at this investment platform and marketplace for SaaS online businesses and digital assets. His meticulous attention to detail has been crucial as WebStreet scales up. Welcome someone who is bringing SaaS investment to the people, Kyle Kuderewski. Hey Kyle, welcome to SaaS Fuel.
Hey Jeff, thanks for having me. Excited to be here.
I am as well. Yeah, I love your background. Very unique in where you've come from and what you're doing in engineering and to investor and entrepreneur. Tell us about that journey and what's been most valuable in your transition.
Sure, thanks. Yeah, I like to keep it interesting, never a dull moment. So short version is I did a traditional engineering path. I was in, went to engineering school, did my master's in engineering, got into a stable corporate America role, which treated me well for a lot of years. Nothing negative to say there. Just I always had an entrepreneurial itch and knew that I wanted to challenge myself. I'm on my own one day. So the short, again, version is I saved up money in that stable role and I knew I wanted to start a side hustle. And I didn't really care too much what it was as long as it interested me and challenged me. And I learned about the world of online businesses and I came close to purchasing a few small businesses and working that on the side. I ended up getting into the vacation rental real estate side of things instead, just because of the location. I live here on the East Coast near the beach, St. Simons Island, Georgia, and I studied the market and saw how high the demand was. So I got into vacation rentals. I still own some vacation rentals that I let other people manage for me. But I never took my eye off the online business world. So I discovered Empire Flippers and some of these other brokerages. And today I'm with a company called WebStreet, which we of course will get into. But it always really drew me in because of how early I thought it was in the game. How, I still think it's early in the online business world. It's going to continue
Yes.
to expand. And then also just the freedom that being able to work online and develop that cool culture, remote work, digital, entrepreneurship drew me in. And so that's, Web Street is online business and investing combined. And so that's why I'm here today.
Very good. Tell us about Empire Flippers and how that led into Web Street.
Sure. So Empire Flippers, some may be familiar, is simply a brokerage for online businesses. So a physical business brokerage would be, somebody builds a business, they decide they want to make an exit, they want to retire, or they just want to sell it and do something different. They would go to this brokerage and they would have a list of buyers lined up and they would basically facilitate the sale of a business. Empire Flippers does that for online businesses. So basically, any type of business that doesn't have a physical location. So now the obvious ones are Amazon FBA was huge during COVID, SaaS apps, content, display ads, but they've sold all types of mixed bags of different monetizations, things like that. The really cool thing is they've been around for over 12 years now, I believe, over $500 million with a B in dollars in businesses brokered. So that's over 500 million in businesses brokered. That's quite a track record. And yeah, they're one of the bigger ones in the online business world in that space.
Nice. And what about Web Street? How did that come about?
Yeah, so super interesting, a light bulb moment for us. So over the years of brokering those businesses, we continued to hear, can we just, I don't have the time or the skills or the want to run this business anymore or run these businesses. Can I give you the money and you go, you run the businesses for me? I'd prefer to just give you $500,000. Can you run it for me? Or is there a way to invest in these businesses? I know there's a ton of upside, but I can't do it, or I don't want to do it. We told them no. We told people no for years on that. That's not our model. It's not what we do. Get out of here. So really Web Street wasn't even necessarily our own idea, but after hearing that enough, we decided to create a way for people to invest in online businesses completely passively. And so Web Street started out as Empire Flippers Capital, separate company, separate LLC, but we'd like to say a sister company. We shared a bunch of resources for the first year, engineering, marketing. Obviously, when you've brokered that many deals, you have a huge network of people that know your brand, that trust your brand, and that are excited about online businesses. So we did about a year under the name Empire Flippers Capital, and then we transitioned off, and we're completely separate now, own our own platform, own brand, and we're about 3 years. That's about 3 years now that we're into that.
Nice. And you talk about it like a fund in a box model. Explain what that looks like and how it works for entrepreneurs to raise capital and others to invest in businesses.
Sure. So it's interesting. Empire Flippers was always a two-sided marketplace, right? You got buyers and sellers. Well, Web Street's similar. You've got what we call operators or portfolio managers. We use those terms interchangeably. So those are the people that are professionals at, like yourself, at building online businesses and acquiring online businesses, selling online businesses. So that's one side. And then we have the investors who want to take part in the upside of online businesses. And what we do is we facilitate that and make it completely hands off for investors. Aside from investing the money, they don't have to do anything else besides enjoy their returns, right? If we're doing everything right. And then on the operator side, we recruit some of what we think are the best online business operators in the world. And, we had a big network through Empire Flippers for years and years that gave us a good start. We're always looking for more. But what operators really love about us is we go out and raise the money, and then we let them go acquire businesses based on their strategy and based on their skill set. So if you've got experience and you sold a few $750,000 sites and you want to go buy $1 million or $1 million in a $1.25 million site, but you don't want to put all of your own money in, we can go raise that money for you and allow you to scale your portfolio and scale, the businesses that you've grown, which a lot of operators love. The other thing that they love is they don't have to deal with any of the stuff that we do on the fund in the box side. They don't have to deal with investor relations. They don't have to deal with taxes. They don't have to deal with legal. They just simply run the businesses, and which is what they're really good at, right? And they don't have to worry about all the other stuff. So that's what we mean when we say fund in a box.
And I think that's fantastic because that's all the stuff that most of us entrepreneurs don't want to do. That's the non-fun stuff and the non-fun part of a business. We just want to go build revenue. We want to
and
grow. We want to
scale.
make sales. We want to
Yeah.
create cool stuff.
Yep. Exactly. And so we allow you to do that. It's interesting that this, again, wasn't something we came up with on our own, but now that our pool of operators is grown over the past 3 years, we've got 17 or so funds or 17 or so different operators running, multiple businesses apiece. They've created their own community they do masterminds where they work together and they share ideas on what's working, on what's not working. And they're focusing on the things they want to focus on and sharing ideas amongst each other. And it's been a cool community of Web Street operators. And a lot of them have done multiple fundraisers with us now. So we have one that just wrapped up his 4th fundraise with us in 3 years. So you can do the math. He's staying pretty busy, but that's the idea. That's the model, is you can not just come work with us once, but if you enjoy it and you're successful, then we're glad to have you come back again and raise money for you again.
Yeah. And so in this scenario where he's doing it multiple times, is that follow-on acquisitions for the same company, or are these different companies? Like you do one, sell that, and then back for another round? And
yeah, so you do one and come back for another round. These businesses are, I guess the short version there is, you can sell some of your businesses that you've done with us before coming back, but you don't have to. Now,
okay,
if you've done several, and depending on the monetization, if we think you're stretched thin, we may tell you, let's wait and maybe exit some of those businesses before you come back. But I guess that's a key part of the model as well, is when they make these acquisitions, generally they're going to run those businesses as long as it takes for them to implement their growth strategies. And once they think they've done everything they can to grow the businesses, they're going to make exits on those businesses, and they get to take part in the sale. And so does the investors continue to get, the exit is a big part of the profit plans. It just varies depending on monetization. Some of the content operators, they have teams in place where they think they can scale many more businesses, whereas a SaaS or a large FBA business probably just needs to focus on one or maybe two at a time. And so it's all unique depending on the model and the operator.
Yeah, business models would be different, take different numbers of employees, take different numbers or different amounts of time to lead. But ultimately, if you're a great leader, then you have a team in place, and what you're doing as the business scales is less and less.
That's exactly right. Yeah, that's exactly right. And that's one of the biggest criteria we look for when we're bringing on portfolio managers and it's why we use the name interchangeably, right? Operators and portfolio managers. Yeah. Because if they're at the scale that we're really talking about, they're not doing all that much operating, down the road. Like, they're managing their team. They've got their team in place. They have a proven method to scale. Of course, there's going to be curveballs and you're going to have to check and adjust, but that's why we use both terms.
What kind of trends are you seeing going on specifically in the SaaS space as far as acquisitions and growth, and what kind of activities are you seeing?
Yeah, so I'm the ops manager with Web Street, so I'm not super involved in the acquisitions. You should have my counterpart Blago on at some point. He's really day to day in on all the acquisitions, but I do hear enough to be dangerous. We're extremely picky when it comes to businesses because we're spending investor money. We brought our first SaaS operator on last year, and he recently wrapped up his acquisition period, and we actually returned that money back to investors. He didn't find an acquisition that he fell in love with, and we returned that money to investors. So that's something we always are looking at. We're not going to spend the money on bad businesses or businesses that don't fit that operator strategy. But a little more detail there is he actually closed on a deal, or was very close to going. He was in exclusive due diligence on a deal and just found some inherent risks around AI and other things that made him uncomfortable 2, 3, 4 years down the road, that he didn't think the model would continue to work for him. So we backed out of that deal. So the reason I say that is I'm sure you guys are all thinking about AI and how it affects businesses, both in a good and a bad way. That's a very obvious trend. Yeah, that would be the biggest obvious one in SaaS. And then just the other trend is I'm sure is becoming extremely popular. People enjoy the recurring revenue model, being able to predict revenue and out better than single purchases. I don't know, you could tell me, but it seems like it's becoming more and more competitive. There's a lot of people out there creating great products. So
yes,
it feels that way.
It's getting easier to do, and the barriers to entry are lower than they've ever been. And as operators, really thinking about what kind of true competitive advantage are you building? What are you creating? And how do you keep that moat? Because it's becoming more and more difficult to defend.
Yeah, I heard you talking recently about that. Oh, sorry. Yeah, continue.
I say, you may have taken 2 years to build something, and somebody now can build that in 3 months.
Yeah,
and
and they
they've
may
caught
be
up with
more
you.
nimble, and they may, they can just build on top of what you've done and maybe make it a little bit better, or spend more money on marketing or whatever it is. I heard you talking recently about the onboarding experience and a few different softwares that you were using and making sure that people stayed focused on the
Yes.
problem that the person is trying to solve. They're not looking to come buy a software, they're trying to solve a problem. And that really hit home. I thought that was very smart, along with kind of gamifying the onboarding process and where to put what in that process. I think all of that's really critical. So
It
yeah,
makes a big difference. You could have two products that are identical, but if that process is really good with one and not with the other, then you get user adoption and you get people involved in using the product and getting results with one, and the other one. And again, they could have exactly the same functionality, but if that onboarding process is broken, or it doesn't work well, or you don't really get them energized and activated, then you could have even a better product lose to an inferior product because they got that part right.
I'm sure it happens all the time. Yeah. So yeah, that's
Sure.
super insightful. So that would be two large trends I would say, is people competing around AI and how that's going to affect everything. And then just overall competition level, and products being easier to build.
Yeah.
Ready to dominate your market and skyrocket your revenue? Dive into Small Fish Big Pond, building a world-class business that swims circles around competitors. This book is packed with powerful marketing and leadership insights guaranteed to transform your business and operate world class. Small Fish Big Pond delivers proven strategies to sharpen your marketing message, deliver unmatched value to your clients, and guide your prospects' buying journey to the inevitable conclusion that your company is the only solution for them. Inside, you'll find step-by-step frameworks and time-tested growth principles to attract your ideal clients, convert them, and then transform them into your brand ambassadors. Get your copy today in print, ebook, or audio at smallfishbigpond.com or on Amazon. And remember, every book sale supports charity, so dive in and make a difference.
That's definitely true. What trends and monetization strategies are emerging that you see, and how do those impact business growth?
Overall in the online business landscape,
Yes.
yeah. So the big ones for us when we started out were content, which could be review sites, blogs, that type of thing. Those are still around, obviously, but there's the same risks there around artificial intelligence, cranking out SEO, Google algorithm updates, all that type of thing.
Yeah.
I don't think that model is going away anytime soon, but it's something that we're being more cautious with. If we're going to bring somebody on in that side, they're going to have super high quality teams in place that know how to rank, that are in a niche that really a niche that's good for them. Some niches, supplements or healthcare, pet niches, some of those are extremely competitive. So those are some of the same trends in content. But yeah, I think a bit riskier as everybody's holding and watching what Google's doing right now and what AI is doing. The other two, well, there's really three more that we've been bringing on board. FBA is still a huge one for us. A little bit of a holding pattern there as well, just because the FBA bubble got so large during with aggregators purchasing up all types of sites. And we saw that on the Empire Flipper side. We sold businesses for $14-15 million, which is great, but the aggregators were just throwing money hand and fist and outbidding each other above asking price, and it just wasn't fully sustainable. So that's another one though that's gotten extremely competitive. So if you're going to be an FBA operator in general or with us, you need to be really an expert at it. It's not nearly as easy as it used to be. And then one that's a little bit less competitive, but has the same risk around AI writing and cheaper outsourcing writing is Kindle Direct Publishing. So we do have some operators on board with WebStreet that have been very successful with KDP. And that doesn't even necessarily have to be fiction, nonfiction type books. It can be handwriting books or music books or different. You can get pretty creative with Kindle Direct, because a lot of times now they have a mix between Kindle, but they are also still selling physical books or add-ons with them. The last one that we've started to do a little bit more of is a mix of agencies. So online business agencies, whether it's marketing or due diligence agencies, those type of things. There's a lot of those out there that are very successful, that have good teams in place. So that's something we're starting to evaluate, but we haven't really fully moved into yet.
Nice.
SaaS is definitely the one we're the most bullish on. I mentioned the one operator that we refunded his money.
Yeah.
He's going to come back. He's going to come back and work with us again. We have a small acquisition period after our fundraise. So generally we have about 2 to 3 months of a fundraise, and then we have 90 days where they're going out and acquiring businesses.
Okay,
That's
that's
not that
quick.
long. Yeah, it's quick. Now they're looking ahead of time. So really it's more in the 4 to 5 months range because they're starting to look, but they're not going to purchase anything until the money's fully invested. So it's quick.
Right.
And so he's going to come back and work with us very soon on the next fund. But in the meantime, we have our last fund had 2 SaaS operators, and one of them was focused on B2B and one was focused on B2C. And they're doing acquisitions right now, and it's off to a strong start. So,
That's great.
yeah.
It's definitely a good market. I think it's really interesting and wise to look at a company and then not pull the trigger. Where, if you look at the other side, maybe venture backed would have jumped all over it because it was AI,
Right.
and just jumped in because it's AI and AI is awesome.
Yeah, no, you're 100% right. And we always target to deploy 80% of the funds raised. So if we do a couple $1 million fund, we know we're never going to hit. If it's a $5 million fund, we know we're not going to hit 5 million on the dot, right? But our
Sure.
target is about 80%, and we'll return 20% to investors. But we would much rather return 80% if we don't find businesses that we want to buy.
Right.
You know,
It's a very different model than we raised a fund. We got to spend the money.
Gotta spend the money.
So we'll throw it out there,
Yeah, that's exactly
which
right.
I think the VC model is just completely broken.
Yeah, I would tend to agree. I think more people are starting to see that as well.
Yeah, unfortunately.
Where are
I think
you?
it's
I'll
the
ask
people that
you. You're
sold in
talking about
21 are,
what's that?
I think the people that sold in 21 are pretty
Yeah.
happy with the numbers that they got.
Yeah,
Just crazy valuations, and now they've come back to earth, and profit matters again, and those kinds of things. And
for sure. Yeah, yeah. We slowed
yeah,
down on the printing money. Let me ask you. You just mentioned it being a pretty good market or strong market. Where are you seeing the most deal flow? Because when we first started, we were only purchasing through Empire Flippers for that first year, just because we knew their vetting process, and we wanted to make sure, we didn't have all our own vetting processes in place yet. So we wanted to make sure we were getting high quality businesses. Now we're broker agnostic. We've purchased from many different brokerages, and we've purchased many deals on private deal flow as well. So do you have any places you like to look, or do you mostly do private?
mostly private. I think we get the best deals, the best valuations there. A little bit less competitive, and looking for companies that really have good fundamentals actually do matter. And so looking for that, looking for profit and upside. Operators that the same profile that you're looking for, operators that have done it once before are some of my favorites. And really, what is it that they want to do? It's not that they're looking for money just to fund operations or to build something they think might have promise in the future, but really have a plan to put the capital to work and scale up. So those are the types of things that we're looking for, anywhere from half a million in ARR up to 5-7 million, like that, and to really have a big upside.
Yeah, perfect. We're on the same page there. So well said.
Yeah, yeah. Love good operators. People that have a vision and that haven't raised a ton of money. Cap tables aren't all messed up, and they're by the time they hit a million ARR, and just hoping to find somebody to rescue them.
Yeah.
There's kind
Yeah.
of
And
some
like you
sad
said, I mean,
stories out
strategy
there.
fit is important too, right?
Yes.
If that person's already tried all of the same, already implemented all the same things that you're going to come in and implement, then that's maybe not the best one to purchase, or, it just matters. That strategy fit matters, of course.
Yeah. Yeah. I love a bootstrap mindset. So they really have that, and it's like, we could raise, but we don't have to, and we'll be okay if we don't. Those are the kind of companies that I love, because they're scrappy. They figure out how to make it work, and can they do better with more capital? Probably, but it's all about execution. It's not just about throwing money at a problem and hoping it'll go away.
For sure. Yeah. Yeah. Your systems matter. The execution matters. Your team
Yeah,
matters a lot.
yeah, yeah. Scrappy problem solvers. I love that.
Figure it out. Go figure it out.
Yeah. So when you're scaling an investment platform like WebStreet, how do you do that, and how do you address the really kind of three-sided marketplace? How do you build all those at the same time?
Yeah, now that this side I can speak to even more in depth than the acquisitions, because we built our platform from scratch. We hired an engineering firm and we have, project managers that, which, I don't know if that was we like to think it was the best way to go. Our first fund, we worked with a fund admin that's no longer around. They had a platform and it wasn't a very good experience. I'm sure they were it just wasn't necessarily a good fit for us. So we integrated them into our website, and they were supposed to handle all the money coming in and the quarterly distribution. So that's one of the things that's different about us is each quarter we distribute profits to investors, which is great for investors and great for everybody, but it requires a lot of technology. It requires banking. It requires, a lot on the legal side. So the first thing was really trying to we learned from a lot of those mistakes. What we saw on the fund admin side, that first fund admin we used wasn't able to identify wires properly and different stuff like that. And it just got to be really manual. So we knew what we didn't want before we got started. And then really had to go to the legal drawing board and determine, okay, what SEC regulation are we raising under? What are the know your customer requirements? What are all the legal documents that have to be signed? How are we going to integrate DocuSign or HelloSign or whatever we're going to use? And then how are we going to distribute funds? Really making the platform so that people can go choose what operators do they want to invest in, right? Or which funds do they want to invest in, and building all of that out. So we built all that, and it's not a finished product yet. We're about to roll out an investor dashboard now where you can go see I'm invested in 75% SaaS, 25% FBA. Here's my returns over the life. You've all seen these investor dashboards that
that's great.
Big banks have. We're getting ready to roll that out now. So we're always adding new features, but yeah, I'm not sure if I answered the question, but really a lot of the engineering, legal, and aligning all that up. And then just like any other software, building everything, putting it into staging, extensive testing, rolling it out to production, and then teaching users how to use it. And that's where we're at now. You go take a look at the platform. It's come a long way. It's got a ways to go. Building different funnels in the platform, right? So we have one for people that are interested in being a portfolio manager, completely different from people that want to invest. And so building those pages out and making sure they're getting the right information, making sure we're getting the right information and contacting them about the right things. That's constantly what we're working on the operations side.
That's great. And you have a really unique culture, WebStreet, and it's all remote. Is that correct?
Yes, we do. That's a copy pretty much from Empire Flippers as well. And one of the things that drew me in, aside from wanting to be in the online business world, I wanted to get remote, but more than just working remote, Empire Flippers has always been distributed. And it's a really unique culture that works really hard, gets together on these meetups once or twice a year, or these retreats where we play and have fun, but we work hard to strategize for the year as well. And also put faces with names. It's a lot easier to trust somebody after you've met them in person versus just messaging them on Slack for the first time. So that culture was really unique. And, if you can go anywhere you want, as long as you have a reliable Wi-Fi connection and you're able to, willing to work whatever hours it takes for the time zone. So that was one thing that was super attractive. The WebStreet's a much smaller team than Empire Flippers, but we just wrapped up a company meetup down in Argentina. We took a polo lesson and we played some paintball and went to a tango class. And then we had a co-working space where we worked each day and worked on cross-developmental projects and things like that. So I'll tell you, the last thing on the culture is it's really interesting when you build a solid base of those people that enjoy the same type of things, but are also, they hold each other accountable and they work really hard. It feeds on itself. You start to get a lot of good applicants for new positions, and hopefully you mostly make good hires. But even if you, on the occasional time that you don't, they weed themselves out pretty quickly. So,
yeah, that's good. How did you pick Argentina for the meetup point? Do you have a large number of people there, or was it just like a central location?
On that one particular, I would say on the debrief, that's one where we messed up. It was not close for anybody. The location was awesome. Don't get me wrong. Buenos Aires was awesome.
Yes.
We wanted to go. We had done Europe last year, and we had done a few in Asia. We want to usually go somewhere with relatively good weather that's not overly expensive. A meetup in a lot of United States locations could be pretty expensive. A Vegas or something like that, New York City. Sure. So it was just South America's turn, and we picked that, and it was a really good location, but it was not close for anybody on the team. 9 hours south from Miami. Yeah, we'll probably target another one in Europe later this year is what we're starting to look at.
So what's been the best location for a company meetup?
Yeah, probably the best. Phuket is really good. Thailand, we really liked that. My wife and I we jumped down to Bali after that, which wasn't part of the company meetup, but we were over there, and that was one of our favorite locations so far. Another fun one was we did a Mediterranean cruise. It's about 12 of us. We were that size at the time, and from Rome around the Mediterranean, and you would just jump off at a different spot each day. That was a fun one, but Thailand's always good.
Yeah, that's great. Yeah, beautiful there. Bali, absolutely gorgeous. And you're a scuba diver as well.
I do love scuba diving. Yeah, I do. Bali had some great scuba diving on the East Coast, on the East side, and enjoy scuba. Do you?
Yes, absolutely. Yeah, you have a favorite dive site, dive location?
Bali was really good. The wildlife there was really good. I did years ago, I was able to do the Great Barrier Reef, which was cool. It was really cool. There's a little bit of sadness there. Obviously, you can see some of the reef has been bleached. The cenotes in Tulum were pretty fun as well. A little bit scary as you get pretty deep in, but those would probably be the top three.
Yeah. Cenotes, absolutely surreal.
Yeah. 100%.
That was very cool. Well, where can people learn more about you and about WebStreet and Empire Flippers online?
Yeah, so WebStreet is webstreet.co, not .com.co. I know obviously the podcast is SaaS heavy. So if you're looking at being an operator or you want more information on operator, there's on the top banner, it just says raise capital, and that's the operator page. So all that information's there. If you're looking at investing, then just any of the other, just start here. This is a perfect place. My name's Kyle Kuderewski. Hopefully then it'll be somewhere in the notes because it's hard to spell, but I'm really active on LinkedIn. And my email is kyle@webstreet.co. And I'm really, I respond to everything on there as well. So those are the three best places. EmpireFlippers.com is they've been around for a long time now. They have a ton of great resources on their blog. We're working on ours. It's getting there, but they've been at it for a while. So tons of good information out there between those two sites.
Excellent. We'll make sure to link all of that in the show notes and then to you as well.
Perfect.
So they won't have any problem with spelling.
No, good. Please do reach out. I look forward. I always like connecting with people, especially in the online business community. So don't be shy.
That's great. Well, Kyle, thanks for being on SaaS Fuel. Fantastic.
Thank you. Good talking to you.
Thanks again, Kyle, for coming on the show and sharing your insights and resources. You can learn more about Kyle and WebStreet at webstreet.co. And Empire Flippers is empireflippers.com. As always, all links, highlights, resources, and full show notes are available at saasfuel.com. And be sure to check us out on YouTube as well. Full episodes, outtakes, funny videos, lots of great stuff on there, training. So it's all there on our YouTube channel. And thought leaders share. You're a thought leader? I'm betting you are. Well, share this episode with someone who could use a laugh about hard conversations. And everyone who shares this week gets a Fearless Filter. It's an augmented reality visor that overlays your daily challenges with visual cues of success, boosting your resolve to tackle those leadership challenges head on. Join us next Tuesday where our founder is Dr. Masha Petrova, founder of Nullspace. We'll talk about her founder journey and how she built 3 simulation software startups, all acquired in the last 10 years, and her current spin-off company. Absolutely amazing founder. And then next week on our SaaS Fuel Expert Series, we have Bob Kawabe, a financial expert who works with successful, self-made, family-oriented business owners and helping them transform to live what he calls soul purpose in life. Very, very cool. Bob is an amazing guy, and you'll love this episode. So I will see you next week, and as always, enjoy the journey.
Thanks for listening to SaaS Fuel. Full show notes for each episode, which includes a summary, key takeaways, quotes, and any resources mentioned, are available at saasfuel.com. Be sure to follow and subscribe wherever you listen to podcasts. And if you're enjoying the content and getting value from these episodes, please leave us a rating and review at ratethispodcast.com/SaaSFuel. We'll be sure to read these out on future episodes.